Good morning, everybody, and welcome to the Daily Energy Markets podcast. It's perhaps too early in the morning to think of former leaders of Libya wandering around in spandex, I don't know, Adidas outfits or whatever they were, but that is a story for late nights where another time. Welcome back to the podcast. Brent crude oil trading up a little bit this morning after still a bit of a sell-off yesterday at 77.44 on Brent this morning. Let's sort of start our opening thoughts with a sense of outlook for the year ahead. We haven't had the chance to hear from some of our speakers who were unable to join us on the day of our global energy outlook. So let's perhaps kick off this morning with Ali Al Riyami, the former senior energy marketing at the Ministry of Oil and Gas in Oman, as it was once called. Ali, looking at the year ahead, we're now at the end of January. Brent has been through a sort of drama up and down through the month, but ultimately more or less where it was when we last talked, perhaps before the holiday season. Your thoughts on the outlook and the direction of travel? Is there anything you see that's going to give this market a different direction of travel?
Well, actually, it's a very tough question to know what is the price going to be for the whole 2025, because we started the year this year with a limbo. Actually, a lot of new things happening, new sanctions on Russia, peace in Gaza and Lebanon. Hopefully, inshallah, with Lebanon with Iran soon. So there are some geopolitical issues still there, but we saw that the sanctions on Russia started to affect the prices, and the prices went up during that time. And then Donald Trump came in and with his statements and different opinion on different things. We saw that the prices now, oil traded on 77 instead of 83. So I think it's all of this will change, and the main things will still be there is the fundamentals, and then the fundamentals are depends on the growth, the world growth, and also what is going to happen in China, basically. If we are optimistic about China, and we are hoping that the growth in China will be reality, which is there is a big doubt, a big question mark on that. But if that happens, then I think we should see the $70 and $75 oil in 2025 is a realistic number, is a realistic price. Otherwise, if we don't see any signals of any improvement in China with the peace in Russia and Ukraine, then the price could go down to, I don't know, 65, 70 maybe. That is the expectation, but it all depends on these two things basically: sanctions in Russia to be lifted, and also the growth in China. The other factor could be the other thing could be also has an impact on the price is if Donald Trump decided to have sanctions on Iran, or more stronger sanctions on Iran. Now that it may have some another impact, but so far we haven't seen anything to do with Iran. Maybe that will be passed, inshallah,
Yeah.
hopefully. And the last thing, if there are also again any other major changes on the relationship between USA and China when it comes to interest rate and what is it?
Tariffs and sanctions.
Tariffs and sanctions, yes. So those are the things that we need to look on
Sure.
2025 and to see what are the impact they have. Of course,
Okay.
OPEC Plus and
we'll get to all of that in due course. But Dr. Charles Elina, CEO of Cyprus Natural Hydrocarbons Company and Senior Fellow at the Global Energy Center at the Atlantic Council. Dr. Charles, welcome back. As mentioned, some of the issues there by Ali, ultimately, we're still stuck with the same fundamental framework. China weakness, uncertain geopolitical outcomes, but ultimately, geopolitics hasn't really been impacting oil prices for a while, except for brief moments. Your thoughts at the beginning of this year, just taking a sort of bigger horizon outlook for the year ahead. I know we're dealing now with the daily energy markets, but I wanted to give you and Ali the chance to give your sort of year ahead thoughts as we had from all our other analysts earlier this month.
I don't want to repeat what Ali said. I think Ali summarized the main issues.
Just disagree with everything he said.
I just want to refer to an interesting publication by by EIA in the United States. They did a comparison between their forecasts of oil production and oil price for the last 3 years, and they appear to have come remarkably close to what actually happened. So relying on that, the EIA says that this year the oil price will average around $74-$75, and oil production will go up by, or demand will go up by 1.6 million barrels per day. I think this balances all of the issues, and Goldman Sachs appears to agree more or less with what EIA says. They come up with a broader range, but the average is not very different. So $74, $75, given the fact that Trump's drill baby drill is toned down by the industry. The industry doesn't expect it's going to have a massive impact. The U.S. companies will not be able to respond to that the way Trump wants them to do. I put credence to EIA's forecasts.
Let's welcome Kate Durian, Mies contributing editor, a non-resident fellow at the Arab Gulf States Institute in Washington. Kate, sort of back to the immediate, we're a week into Trump's return to power. The sort of more immediate news to digest has been some of his jawboning around OPEC. OPEC Plus should be reducing prices, should be increasing supply, or generally that narrative. So let's sort of pick that up and see. Any chance OPEC Plus likely to react to that? Your thoughts about the intersection point between Trump 2.0 and his strategy and OPEC Plus as they face this new year of somewhat weaker demand growth?
Yeah, I already have whiplash from his first week in office. I mean, it's like, tariffs, yes, tariffs, no, the whole thing with Colombia. It's very hard to see how it's going to go. But he wants energy dominance, but he wants lower prices. The two don't really go together because the companies aren't going to invest in new acreage unless it's economic. It's not going to happen overnight. It takes years. Yes, shale, you can sort of drill and it comes straight out. But, these companies are practicing restraint, returning capital. And with the uncertainty, he wants interest rates to go lower, but the interest rates are not. When you look at interest rate policies, you look at the EC, you look at it has to be consistent. It has to be consistent, right? You've got to have inflation holding at a certain level before you can decide whether it's time to free it up. So sanctions against Iran, yes, possible. I think Iran is probably going to be more in his sights because it's an easy target. Iran is weakened. They're already suffering because China is not importing as much because of the sanctions by the Treasury on tankers, on the shadow fleet. Russia is a different story because he's got to balance trying to sort of negotiate a peace in Ukraine and at the same time, squeezing their revenue. So the two don't really go together. Something has to give. But I think we will see a slightly tighter market. But don't forget, there's so much spare production capacity. The whole geopolitical situation is baked into the market anyway, which is why we're seeing these prices. And I said before, prices are unlikely to hold above 80 because fundamentally there is enough supply. And we heard Nasser in Davos the other day saying we have the capacity. They're sitting on more than 3 million barrels at the moment, just Saudi Arabia alone, and can be brought brought back if necessary. We're seeing China buy more Middle Eastern oil because they're not buying as much, well, Middle Eastern oil from the Arab producers as opposed to from Iran. So I think he will need to make space. I mean, if he wants to export more oil, I think gas is a more interesting story because there's more potential there to increase gas sales, LNG sales to Europe. So I think it's going to be, with all the uncertainty, it's very hard to know, but I think Iran will be a target for tighter sanctions, and I think we will see. The problem is the OPEC Plus going to make up for any loss from Russia? You know, cohesion is something that Saudi Arabia feels very strongly about. The relationship, the alliance within OPEC Plus with Russia is very important. They would want to maintain that. Otherwise, they just lose their grip. So I think that's going to be the difficult.
Well, maybe Ali, you could just ask Ali to pick up on that. You know, this is a new era now. I mean, whether one sort of, that's the question. How big a change moment are we in here? Your thoughts on how you think OPEC Plus will respond to the new U.S. administration's demands? Last time, the last administration, OPEC Plus listened but didn't really react to any of Washington's demands or sort of insistence. This time round, how do you expect OPEC Plus to reply to deal with Trump 2.0 and the immediate sort of request for lower prices and more supply?
Well, I think I don't think they will react differently than last time. If you're talking about last time when Donald Trump was in the administration.
No, Joe Biden, I'm talking about it. Just immediate last government. Yeah.
Okay. I think Joe Biden was more relaxed when it comes to OPEC Plus. He didn't use pressure too much to change the decisions of OPEC Plus. But Donald Trump, during his first period.
But what Biden did do was he did release a lot of oil from the petroleum reserve.
Because he failed to convince OPEC Plus at that time, and that's why he went and released the strategic reserves in America. During if you remember during Donald Trump period, the past period, he was more stronger when requesting OPEC Plus to react and to bring the prices down, and he failed actually at that time because they have listened. And I remember that I was attending this meeting at that time. We were listening to him, and but the decision in OPEC Plus and OPEC meetings was completely to reflect the reality, to reflect the market conditions, and also to reflect the needs of the members of these countries, of the members of this alliance for their budgets and so on. So I think this time it will be the same. The only time that we have listened to Donald Trump is when we decided to reduce 10 million barrels per day. And that was also a request and accepted by OPEC Plus because of everybody knows, because of the COVID and because of the growth at that time was not there and the prices was about less than 40. So I think this time it will be the same. They will listen, but I don't think that they will take the request to lower down the prices because again, Sean, as you know, that the OPEC Plus, they are never, at least this is what they always say, and they want us to believe that they are never, behind the prices. They are all, most of the time, to stabilize the market, and they are focusing on the supply and demand and to make sure that there is enough oil for energy for the world. So price is not in their mind. At least this is what they're saying, and I tend to believe on that. So I think they will not really react so much, similar to what happens last time.
Charles, I wanted to get your thoughts on where we are in Europe. We're obviously a few weeks away from the German elections, but also this sort of Trump 2.0 idea that, as Kate mentioned, Europe has a big requirement to draw gas from America, the United States. the urgency in which we were sort of led to believe that Trump would tackle the Ukraine conflict, resolving it, ending it, whatever you want to say, seems to be not materializing in any way at this moment. No indications of any immediate resolution there. Where do you think Europe goes now with its sort of energy requirements and the demands by America to buy more oil and gas from the United States to correct the trade imbalance?
Well, first of all, Europe at Davos said already that they are ready to buy more LNG from the United States. I mean, the estimate is that they will probably need another 14 billion cubic meters of LNG this year to replace the ending of Russian supplies through Ukraine. And Europe seems to be ready to accept buying American LNG. But Europe is finding itself unprepared for Trump, despite everything, despite the fact that they had time to think about it and they said many things before Trump came into power. They are not ready. They are panicking in all directions. Davos showed the fact that Europe is not ready. But tomorrow, Europe will be announcing their new economic vision. It's called Competitiveness Compass. And based on that, what they're saying is they're going to put deregulation and cutting of red tape ahead of decarbonization. There is a huge pressure in Europe to tone down the Green Deal and place more emphasis on competitiveness. And it remains to be seen how serious this is. This is tapped to be a major change, a major attempt by Europe to recover the ground between themselves, United States and China. I'm not so sure.
We did see Germany react quite surprisingly in the aftermath of the Russia's invasion of Ukraine, in the sense that they made big decisions quickly, which is not in their nature. And it's not in Europe's nature to make big decisions quickly and change direction. Do you think this might be a moment of exception, like Germany was 2 years ago?
Well, it seems to be. I mean, if you listen to Ursula von der Leyen's speech at Davos, she was quite decisive, she stuck to her principles and made the point that Europe is a huge market, has a future, and it will stand up and be counted. So all of that is positive. What worries me is that, okay, Ursula may be saying this, but in Germany right now, we have the elections and we have turmoil and confusion, and it's not very clear which way it's going to go. France is nowhere to be seen, and problems in general in Europe are everywhere. Everywhere you turn, there are problems. The economy is not growing. The German economy is going to remain stagnant this year as well. It's going nowhere. The economic growth of Europe is way low. So all of these things worry me. The words at the moment are right. This competitiveness compass will probably bring a new dimension, a new impetus to see things moving forward. But how sustainable that is and how long Europe will stay with this, especially under the onslaught of Trump, because Trump has not yet really attacked Europe. And with Trump,
let's hope he doesn't. He seems to have plans of attacking Greenland. Is that Europe? I'm not sure, but ultimately he seems serious about that one as well. Or is that more bluster?
Denmark is fretting as a result of that. But he hasn't.
Well, they just announced today Denmark plans to spend multiple billions of euros on boosting security in the Arctic areas.
Exactly. And but Europe is, I mean, Trump, you cannot guess what is going to happen next. You should always expect the unexpected. There is I've seen a lot of articles appearing trying to analyze Trump. Cannot analyze Trump. He's not consistent. He's not presenting.
Why is Europe so unprepared, Charles? I mean, that's such a crazy thing to think about after 4 years of Trump, now a number of months.
I think it's very simple. I think the fact that Europe is lacking leadership Germany and France are distracted completely. They're not no longer leading Europe forward. Nobody else is taking their place. Ursula von der Leyen is more a bureaucrat rather than a leader. So Europe is ending up a bit leaderless. So is losing direction. It doesn't have anybody who comes up front and gets counted. And this is a problem. I think we have to.
There's no Angela Merkel at the moment.
Maybe, or maybe the result of the German elections depends who comes in power. Maybe the Germans will turn back and give some direction.
Well, it's their natural position as the biggest economy in Europe. Kate, I wanted to get your thoughts on the news yesterday, and I'm not sure if it's in your wheelhouse of expertise or any of our wheelhouse of expertise, but oil prices apparently fell 2% yesterday on this news that China's got a low energy AI solution, low cost, low energy AI solution. Yeah. Called DeepSeek. Nvidia lost $500 billion in its market cap. Is there a bit like we used to say a geopolitical premium in the oil prices the olden days? Now we need to put an AI premium in the oil price. Your thoughts on the intersection point between those two things?
I was thinking of asking ChatGPT what it thought. I mean, it's like, go to ChatGPT. What do you? Yeah. What do you think about this DeepSeek business? I mean, yes. Again, it's the uncertainty. You've got Trump on one side and the uncertainty and not knowing what he's going to do next. And is it bluster? Is he going to carry through with it? And then you've got this, China coming up now. I don't know how tested this is. Has the market reacted too soon? But yeah, all these companies. And now I just saw a headline saying Microsoft is thinking of buying TikTok. So, you've got all this tech stuff going on, which is impacting the market because Nvidia was sort of, such a huge investor. So investing in nuclear power, they're spending billions in order to drive. And now China comes up and says, you don't need that much, And
it was a big part of the ADIPEC conversation. It was the first paragraph in Sultan Al Jaber's speech.
And who saw it coming? But to sort of go back to the whole narrative, yes, I mean, oil prices are being impacted. I think geopolitics, so long as the flow of oil and gas isn't impacted from the Middle East, I don't think the price is going to react so much. But, going back to Trump, our friend Ibrahim Mohana, in his book, actually counted the number of times Trump tweeted about OPEC during his first term in office. It was a lot. I mean, he really tweeted a lot. But at the same time, if he wants Saudi Arabia, as he said, in that thingy to Davos, saying he wants that he talked to the Crown Prince, they're going to invest 600 billion. Well, you know what? That requires a certain amount of revenue, and that mainly is coming from oil sales. So you can't have both. You can't say, you're going to invest. I mean, okay, it might be just talk, wait and see how much of that 600 billion is invested. But the EU, I think Italy has the loudest voice at the moment. I think Trump likes Meloni more than he likes any other of the leaders in Europe.
Well, she does seem to be the emerging leader. Let's go to the survey question on this point of AI. The survey question is asking, is AI deployment bullish or bearish for oil markets? Bull, bear, neutral. Is AI deployment bullish or bearish for oil markets? We weren't thinking it was bullish because, of course, until yesterday, the whole narrative was, oh my God, a ChatGPT search takes 10 times more energy than a Google search. So that's more bullish. That's more energy. Take nuclear, take everything you can. And then China comes out with this announcement that actually the exact opposite. So this is clearly a challenging moment. Is AI deployment bullish or bearish for oil prices, oil markets? What is still, Ali, uncertain, and you made a reference in your earlier comment that as you used the word, I know you meant it in all of its sincerity, but ultimately I wanted to pick you up on it, peace of the Middle East. Clearly what we have at the moment are two ceasefires in Gaza and in Lebanon. And in the backdrop of those two conflicts, of course, is the ongoing face-off between Iran and Israel. And when you put all of these things that dominated the news in 2024 we have some kind of a pause, some kind of optimistic pause at the moment. Your thoughts on how optimistic we should be right now?
Well, I told you during our lunch in Dubai a few months ago that 2025 will see peace in the Middle East at last. So yeah, we started with the North. I think it's doing okay, not very good, but started very well. And the second patch or the second period, it will be the peace between Iran and EU and also America. That's what I hope. And I think I'm optimistic. I'm still optimistic on that. And I think all parties now they are ready. It's all again now. It depends on Trump, Donald Trump, basically what he's going to do. And I think he's going to put more pressure on Iran. But the willingness from Iran and the messages from the Iranian government to UAE, to EU, and also to America, it is very positive. They have shown some indications within the region here. They are calling countries like Oman, Saudi Arabia, Qatar to try and to have the dialogue with the Americans and European Union. So it's all positive. Is it going to happen this year or next year? I don't know. But there is something. It's been set to be seen that there is initiatives from all other countries. That is my hopes for 2025. But there is only one thing, Sean. I want you just to talk about the Russian sanctions. We saw that it is unforeseen sanctions on Russia, and when Iran and Venezuela they were under sanctions, OPEC Plus or OPEC decided to move them away from any quotas. So are we going to see similar kind of treatment to Russia if the sanctions continue, or we are just going to close and wait and see what is going to happen in Russia? It's something that we need to check what is OPEC decision will be, what is the request from Russia will be to OPEC. Are they going to be treated the same like nothing happened, or they will decide, OPEC will decide to treat Russia like they did with Iran and Venezuela, let's say, in this case.
Libya.
Libya because of war, but Iran and Venezuela because of sanctions.
Can I say something?
There,
yeah,
please,
I just wanted to say we shouldn't forget that Russia is allowed to sell oil. The sanctions are so long as the price cap is in place. So long as the price cap is in place, Russia can sell its oil. I think that's why I kept saying, Iran is an easier target unless Trump decides to do away with that. But I don't think he's going to do it so long as he's trying to make peace in Ukraine. But the sanctions against certain companies operating might impact production, further down the line. But I think for now they can continue to sell their oil so long as it's a price cap. And of course, when prices go down, it makes it easier. That's just
Charles. Let's just wrap up with what does all this mean for the East Med? We've seen some developments recently in the idea that we've obviously had a big change in Syria, a big change in the fundamentals around Lebanon. Let's see how they all play out. But there has been some noise of development and stepping forward with the developments of the East Med gas reservoir. Your thoughts there? Where is this a new dawn for the East Med gas development?
There is a new dawn, but the new dawn is Egypt. Egypt's need for gas is immense. Production is going down, carries on going down. It's not recovering. Over the last 3 years, gas production in Egypt has gone down 30%, while gas demand is going up. So Egypt is thirsty for gas. Israel has already approved expanding its exports of gas to Egypt from 10 to 21 BCM per year by 2028. And this flurry of activities you mentioned involve exporting Cyprus gas to Egypt. So I think the way things are developing at the moment, with Egypt still highly dependent on gas, and new exploration taking years to come, all of the spare gas of the region will find itself into Egypt. we see articles appearing and statements appearing that we will send our gas to Europe, and Europe needs that, and Europe needs the other, and Turkey is proposing again pipelines going to Europe. Europe doesn't need the gas. Gas utilization in Europe has gone down 20% since before the pandemic. If we look at the period since before the pandemic to now, it's down 20%, and it's going down still because renewables are coming up and up and up. Electricity production now is more than 50% coming from renewables in Europe. So it's EastMed gas is not destined for Europe. It's destined for the region, for Egypt.
Well, if you take that piece of the point you made, Egypt, 100 million people in Egypt, and it was always seen as an export market out of Egypt because of their own gas reserves. But now you're saying it's actually a destination for imports of gas. That's a huge market. And then you've Turkey on the other side of the Med, another 100 million people. These two markets alone should be enough to see the East Med at full development, no?
I think so. I think that's the future. And it is developing that way. The only fly in the ointment is Egypt's ability to pay. Egypt has great problems paying. This year, I mean, you mentioned the exports of LNG from Egypt. This year, there will be no LNG exports, no income from exporting LNG, but there could be as much as $8 billion spent importing LNG, $8 billion they don't have. So that is going to be the fly in the ointment. The oil companies are not rushing to do new exploration and production in Egypt. They're doing enough, but not too much, waiting to see how the economy of Egypt develops. But you said 100 million, the population is already 110 million, and it's still increasing by almost 2% per year. So the Egypt's problems are immense. The economy must recover. Fortunately for Egypt, nobody wants it to go down under. So IMF, Europe, the Arab countries are still pumping money. And the hope is that this year, the opening of the Suez Canal, if the Gaza situation is out of the way, will produce some revenue for Egypt and will take things forward.
Yeah, they lost half the revenue of the Suez last year, right, from $10 billion down to 5, I think, under 5. AI deployment is bearish, according to this room. And the other vulnerability for Egypt, of course, on the news last weekend, Trump demanding, I'm not sure what the language is, but ultimately that Egypt take Palestinians in from Gaza you would see Egypt's vulnerability at the moment. If they waved $10 billion in front of their noses, they might say anything, agree to anything. So these are going to be things to watch. There's no doubt about that. Egypt's vulnerability is always a concern. Charles Elinas, thank you. Wonderful to have you back at the table. Kate Durian, as always. Ali Al-Riami, there's no three better in this region than you guys. Thank you so much. Have a great week, everybody. Oil prices trading under $78 a barrel. All the best.
Thank you. Bye.
Bye.
Thank you. Bye-bye.